Hey, y'all, welcome back to Random Gleanings. I am Chris. He is Jesse. Jesse, let's talk some about 2024, what we expect, and just kind of how... Let's have a chart day, Jesse.
Okay, let's do charts.
Okay. All right, let's start number one. These are the Wall Street forecasts for what folks expect the market to be trading at the end of 2024.
Yep. Yeah, we did this, I think, towards the end of last year, but this is now a more comprehensive list of bigger banks and other strategists out there putting out their numbers. And, you know, based on the strength of the end of the year, the average consensus, forecast is not much higher than where we are right now.
Yeah, I mean, up 1%. And the average gain for the S&P is up 10. Let's see, Ed Yardeni's down there at 5,400. That's what for Yardeni? It's double digits.
Yeah, it's 13-something%, I want to say, from where we are right now, roughly.
And Tom Lee, Fundstrat, was in, he took the prize last year. He nearly nailed it. And so that's what, 8% from Tom, something like that.
Something akin to that, yeah.
But the JP Morgan down there on the end is minus what?
Plus, it's less. It's about 11.5% off of where we are. Right.
You know what? These folks making these predictions from year to year have been so not right. And look at this next chart. So you look at this next chart. I mean, the notion of an average of 10% or even, an average of 1% up from all the folks. I mean, basically, if it's up, generally it's up double digits and sometimes by a lot. In fact, more often than not by a lot.
I've said it
go
in a
back
lot
to
of
1980
client meetings. I'm not sure I've ever said it on video, but there's the old Roy Rogers quote: "You never lead a horse across a stream with an average depth of 2 feet."
Right.
Because at some point it's a couple inches deep, and at some point it may be 6 or 7 feet deep, and the horse gets swallowed up in the water. That is the U.S. stock market, right? We've got an average around 10, but it goes up well over 10 very often. And then on bad years, you can see it, do really negative too. So.
Yeah. So next chart, let's look at some of the major averages and kind of what's happening going into this middle of 2024. We had a new all-time high on a monthly chart from the Dow Jones Industrial Average. That's good. Now, that's only 30 stocks, right? Mm-hmm. But they are, big U.S. companies. Mm-hmm. I mean, if you wanted a wider swath, though, this is kind of interesting. The equal weight put in its second highest monthly close ever at the end of December. That's pretty good. I mean, equal weight means every company is 1/500th. So Apple isn't 10% in this, it's 1/500th.
Yeah, I know these charts can be a little bit hard to read, but if you look all the way to the right of this chart, the 3 red bars towards the end there are, what do you say? August, September, and October.
Yep.
At that point in the year, by the end of October, the equal weight was negative for the year. Right. And then it got a big bounce in November and finished out strong in December.
That's right.
Which is a great signal.
Oh, no, it's good because that means more companies are participating to the upside.
That's exactly
and if we're starting to see more companies, if you look at that chart, it's languished for over 2 years. Mm-hmm. So to see it really start to come back to life, that's a good thing.
It absolutely is, and it's a sign of a healthier market.
Yes, health. Right. That's the word that was going through my head. All right, Dow Jones transports. Transports are not quite all the way to their all-time high, but they're getting close. So that would lead you to the next question, which is, what about the NASDAQ 100? What about the S&P 500? Those two are more followed probably than anything. Mm-hmm. They're bumping right up against that high. So on the one hand, you could see, they probably ought to follow, right? At some point they will. But on the other hand, this would be a place right here in this area where it wouldn't be a surprise to see some consolidation and some digestion of the move we've had.
The momentum just taking a breather here for a minute before ideally and hopefully a move higher. Beyond.
Yeah.
So something to keep an eye on throughout 2024, and maybe that's part of where the consensus revolves around that just kind of flattish year. It's not what we often see in the markets. And so, very interesting so far.
Yeah. So next chart, we've kind of gotten back toward a fair amount of optimism again, which again, that's a good thing. So in fact, you can see through periods of extreme optimism in the past, you've seen the stock market go up, which is good. So there's really no reason to get very negative about the fact that we're seeing the optimism we're having. It's a good thing. And this is also kind of a good thing, looking at this just a little bit differently. If we were going to have a rough period of time, you would expect consumer staples, the defensive stocks, staples, utilities, healthcare, you would expect those things to start to do better, right? Well, here's the chart of staples, and this is a comparison chart. This is consumer staples in the United States versus the S&P 500. And we're starting to hit points that we haven't seen since 2021. So if this turned positive and you started to see it moving up in any material fashion, that might be a little bit negative.
But it's not
showing up
somewhat indicative
now.
of money going towards, hey, maybe we've gotten enough growth out of these kind of growthier stocks. Let's move into something that ought to be pretty stable for us for a period of time. And that's what we've historically seen. We're not seeing that right now. Right.
That's right. And looking at the same sort of visual in a different way, this is a ranking that we do on a weekly basis of various areas of the marketplace. We've got 36 items we rank in here. And what you'll see is that consumer staples and utilities are at the bottom. So, that implies that there's no great defensive, like everyone's getting risk off in here.
That's right.
And that's good. That's a good thing. The one thing I would say, for me, that raises some caution, though, this is a chart. This next chart is a chart of a comparison between the S&P 500 and long U.S. Treasury bonds. And I was looking at this chart, and they look pretty similar.
As far as the
way they move.
The direction of their movement.
That's right. You see stocks bottom, you see TLT, the Treasury ETF kind of bottom, and you see them moving up in tandem, which could imply that, hey, as rates kind of rolled over a little bit on the longer end, that's what gave stocks their tailwind as well in the fourth quarter, right? You could maybe draw that conclusion. November's when you see them bottoming, October, November, and then boom, they take off, right? Both of them take off. So to me, that raises a question, right? Like, if the Fed's done, the Fed doesn't, control the long end of the interest rate curve. Ultimately, if stocks and bonds on the longer end are still moving in tandem together, we often think as bonds as what? A defense mechanism.
Yeah, that's exactly right. As a buffering against the volatility of an all-stock portfolio. Correct.
That doesn't look like that.
That's just it. And that is odd and something to, again, keep an eye on. Because you would like to see those things start to have a negative correlation where one zigs and the other zags a little bit, and we're just not seeing that. I'm not sure what to make of that exactly, but it's something that we'll have to keep an eye on.
Me neither, but it gives me a pause on the long end of the curve. It certainly doesn't yell mission accomplished just yet,
right,
on the bond front.
Yeah.
All right. You said you were watching football this weekend?
Yeah, I love playoff football, man, and I am not one that is ever rooting for Dallas Cowboys, so it was fun to see them lose, but they lost to the Packers, who I can't stand as a Bears fan. So it was a lose-lose situation there for me, but
and you acquiesced to Peacock?
I did. In idea of having the Olympics available for my boys, which they'll want to watch. I did. I acquiesced. So, what about you? What are you watching?
Started True Detective Night Country on Sunday night. Jodie Foster.
Okay. You mentioned this maybe a couple weeks ago that you were excited about it. Did the first episode live up to the hype?
It was a little more fearful than I remember the other ones being. It was certainly dark. It was certainly like the other ones in that regard. But it had a little bit of like suspense thriller / not horror, but it kind of headed a little that direction. So it was a little bit, it was interesting for sure. It's good to see Jodie Foster back on the screen. And now I want to go back and watch season 1. I've had the Handsome Family opening song to season 1 of True Detective running through my head.
Awesome.
So anyway, all right, that's all I got. You got anything?
I got nothing else. Thank you all for watching. We just appreciate you all tuning in every week, and share it with a friend, share it with a neighbor. If it's of interest to you, it may be of interest to them. Hit the like button, and we'll look forward to seeing you again next week. Thanks.